Hello, everyone. Today is Tuesday, March 3rd. It is about 6 minutes after 4 o'clock. The markets are now officially closed, and we are here with another edition of Chart the Markets. My name is Mark. I'm from Blunt House Technical Analysis. And if I was to say that there was nothing to talk about today, I don't think you could take me very seriously. There's lots to talk about today. I don't even know where to start. Our chart automatically came up here to Bitcoin, but that really doesn't mean that's the best place to start today. Let's be honest about what's going on. So, we've spoken about this before, and the elasticity in the market that you're seeing is driven by what? It's driven by volatility, chaos, indecision, geopolitical drama, all kinds of things. And after a while, the market can only stand so much. And I'm not saying, we're at the precipice of something huge, but I think we can all acknowledge there's something going on in the world of markets. And it doesn't really matter what we look at. It's pretty consistent that there's really something going on. This is a chart of the NASDAQ 100. That's a daily chart. We threw this level on here as a possible top, and this level down here is, just by looking at it, you can tell that would be the level that you don't want to break, right? That's going to be very problematic if we do, potentially. So it's one of those days or days, weeks, months, years, perhaps, that we need to be aware of the world that's around us, not because we want to live and die by the daily news cycle. That's not what I'm suggesting. But be aware that these types of things cause a lot of volatility, a lot of whipsaw. Early morning up, impulse up, followed by impulse down, only to saw off somewhere in the middle at the end of the day. And everybody's scratching their heads on why. Or price finds these extreme areas to tag up or down and then completely flips and reverses, right? Like, you'll see all of these things on all kinds of different time frames right now. And the only way to protect yourself is to really have a strict set of rules. This is not the time when you can wing it, right? This is not the time to wing it. If you don't have a plan, you're probably planning to fail. It's okay to change your plan, but have a plan. Have something that you stick to almost religiously, where it becomes mechanical. You don't have to think about it. We often tend to make this more difficult for ourselves than we need to. We're human beings. We have a tendency to do that. Overcomplicate things. I have a friend that says, hang on a minute while I overthink this. We do that with our charts. But what we really need to do is what? What we're told. Because the sooner that you realize or accept, in my opinion, that this is a language, it's all based on mathematics, and math is a language, and that there are certain patterns or behaviors that continuously repeat themselves on various different time frames, on various different assets, over and over and over again. And, we can sit and pontificate about the reasons why in between and give ourselves a headache, or we can just sit down, take a step back, and look at what perhaps we're being told. Right? It took me a long time to come to this conclusion that, hey, there's something going on here that I cannot rationalize. No matter how logical what I believe should happen, even based on legitimate criteria, the chart has something else in mind, right? I have given up using this as an example where our filter level, which is a T-line in the 5 EMA, is diverged down and to the right, and then you get this. Remember, if you recall, that's the 100 MA in here holding price up because it was the first touch. But as long as this is open and acting under a sell signal, I'm going to stay bearish. And this is why. Now, it took me too many years to try and fight this to realize that I was wasting my time and that I should just go with it. And there's a reason that these things happen over and over and over again. And when we overlay things like our volume profile, it makes the analysis of this even more interesting because we know what these volume gaps mean. Like here we are on March 3rd. We've talked about this level forever and a day because we always said in all likelihood we'll come back and tag it, and we've done that. But if you don't hold this level and you fall into this area, you know, all bets are off, right? Who knows what happens in here? But we remember that we've had this conversation before, all the way down. Now, at this point in time, is all we have is a candle that found a way to wick that 5 EMA on a weekly chart. So you have that impulse down, you go sideways, you can't break out. This is the failed breakout. Take out the previous way's low. There's the other impulse down. These candles don't show any sort of snapback though, do they? All they show is that they're willing to trade on the sell side of the 5 EMA and the T-line. And this weekly candle was just able to wick it, and here we are pulling back again. So the reason that this was formed in the first place goes all the way back here. And then when we got to revisit it, you know, we say, okay, when you have these parabolic moves up, just remember that there'll come a time when you'll get to revisit it, and it's when you make sure you got your short pants on. And that's what's going on here. So we knew that as long as this was diverged down and to the right, we were bearish. No matter what the crazy intraday daily candles didn't matter. Here we are, still a bearish chart. So that's the first leg down. This is the second leg down. Now, if we had some sort of move like this, like we did in here, totally very realistic to think that, but that's not going to happen as long as we're trading on the sell side of this level, right? One of our rules is you don't make long trades when you're trading on the sell side of the T-line and the 5 EMA. Just like you don't want to make a short trade when you're trading on the north side. Right? It's just suicide. And it decreases your probabilities greatly of being successful. So just stop it. Start with that, right? Regardless of the time frame, just start with that. Until we break through here, close above the T-line with enough momentum to change trend, the weekly chart is still bearish. Now, to put it into greater context, when you look at your Z-score dashboard, which is down here, and it's kind of all part of our system now, and thanks to David Nikoski for getting me hooked on relative strength. But I'm glad that you did, because I think it's made me a more efficient analyst and trader. Because now I'm a little more selective about the entries and exits that I take. Right? If we just use this chart as an example, this is the weekly Bitcoin chart. We're really pay attention to the Z-score level when it breaks 0, and 0 is that center line. What is that telling us? Think of it as, you know what? Nobody's interested in walking across the gym floor and taking a risk in front of the entire school and asking somebody to dance. No one wants to do that. That's all it tells you, right? Nobody wants to be the one to do that. And as long as that's the case, It's going to make it real hard for price to move higher, but where we pay attention is when it falls below that level. The odd pop-up is just chatter. Don't worry about that. So here we have a sell signal, and we have not a lot of relative strength. So what does that mean? It means it validates the probability of price moving down. Not by another measure of price at all. These are two very different things. Sometimes you'll see that relative strength wanes as price goes higher. Or sometimes it goes higher as price falls, but that divergence is important to pay attention to. Don't get too far ahead of your skis in your head. Right now, we all do it, I understand, but sometimes you just got to slow down to go faster. And this is one of those times, because everything around you right now is trying to kill you. That's kind of what it feels like. So just take a step back. Remember some simple stuff. There's a sell signal. That divergence down tells you you're bearish. Don't make long trades or try and cheat unless you're just going to scalp when you know you're in a bearish trend. You know what people say, the trend is your friend? That's probably the first thing you knew before you even became interested in this stuff. Well, here's the trend. So why are you fighting it? It's the first thing you learned. It's your friend. So that was the weekly chart. Still looking rather bearish, right? Where we wicked that 5 EMA and pulled back. But what does that look like on the daily? Not quite as ugly. Notice what happened here. We breached the 0 level on our Z-score dashboard. So that means there's some relative strength coming back in. And then we fire a buy signal. Now, if I back this up one more time frame, the 4 hour is always going to be the on and off ramp to the daily. And at some point, yes, you're going to have to balance time frame. You know, that's all part of the job, right? You can't let the indicator tell you all the time, right? That's not what you have to be able to think for yourself, right? But this is a real good example of why that's important. So if you got in, we're always trying to find that cheater entry, right? But even if we took this, right, we got the big pop up and you had the big retracement. Interestingly enough, because, and you know, I know that you guys are watching this going, damn, like those candles are really hard to eat. Well, the reason that they were so hard to eat is because this parabolic move up, see this big space in here, right? This is the horse getting too far away from the barn. And then the horse wants to come back to the barn. What's the barn? Well, the barn is that place of familiarity. In this case, we'll call it the T line, and or, there we go. There's always someone, right? There's the 20 MA. So what happened? Impulse up, you pulled back, like you pretty much retraced that whole move, right? But you bounced. The trend didn't break. Did you see the T line and the 5 EMA changing, crossing? Nope, none of that happened. Hard pullback and you bounce. And even this candle, this red candle, this current candle, wicked the T line and then seems to want to trade above it. Now, is this nasty volatility? Yeah, that's the elastic we're talking about. That's the elastic. This crazy move up and then a complete and total retracement, right? This is the kind of stuff you're going to see a lot of. The only way to protect yourself from that is to make sure that you're running proper stops and you're taking profit more frequently. Because, and I guarantee this will happen to you, you're going to say, as soon as we end this stream, you're going to be in a situation where you're like, oh, I don't know, maybe I should take it. And then you get ballsy and say, you know what? I'm going to roll the dice. Dice roll. You turn for 2 seconds and you go, damn it, I should have listened. Because the market turned on you, because of the elasticity in it right now. Right? That elasticity is volatility. And it's really, really, really tough to manage it. Right? And don't think that because you've been eaten up by it that you're alone. There's a lot of people that are trying to grind out trades or force them, right? And we don't want to force our trades. You have to let the market come to you. Now, talking about the profitability and things like that, let's just address that for a second. I'm just going to take off the volume profile, and I've put on the trade management component to this script, right? And I just want to give you an example. I don't even remember how this has been set up. So what are we looking at here? So this is 20 leverage. This is Bitcoin. And your first profit level is 20, the next is 30, and then the following one is 60. These are just for examples. You obviously have total control over those fields. So here's our stop level was at 5%. So here's our buy signal, right? Chart's telling us to buy. There's our stop at 5. We didn't get triggered. You can have it at 4. You can have it at 3. You can have it at 1. I don't care. It's up to you. Just make sure you use it. There's your first level. Did you get hit? Yeah. There's your second level. Did you get hit? Yeah. And then there's your following level. Now, that what I think was what I say, 60%? Yeah. What would it look like if it was, I don't know, just for interest's sake, so that you can visually see this on the chart, right? There it is up there. That's 80% profit. And every time frame you look at will show you that very same breakdown. This is just the hourly. So on the hourly chart, there's that 80% profit level. Doesn't seem reasonable, does it? This one hit. This one didn't on the short. So what does that tell you? It tells you that maybe you have to, if this is the time frame that you want to trade, you have to find that happy median between the leverage that you're using, the time frame that you're trading, and the take profit levels that you set, so that you can monetize as much of the chart as possible, both long and short. Because remember, you're indifferent to price. Being indifferent to price will save you a lot of anxiety. And if there's something that you're trading that for whatever reason you're completely head over heels in love with, or that you own it, I would suggest you don't trade it on a regular basis, because your head will get in the way, like everything else. So just indifference to price. Price goes up, you monetize that. Price goes down, you monetize that. Stay out of the chop, trade the breakouts and the breakdowns. And really, that's what we're waiting for with Bitcoin, right? But we're always hoping that that 4-hour chart, at least for me, based on how I like to trade, which is more swing, that I get that 4-hour on and off ramp is super, super helpful, right? Because what it does, it gets me a decent entry onto the daily. Here's our daily chart. So we have that buy signal on the 4-hour. We switch to the daily now. So we're already in the trade. We switch to the daily, and you see that buy signal light up. And notice that you get that break of the 0 level on with the Z-score, with the signal in this case. I'm very, very, very pleased to see that. That's confluence, not just on signal and validation, but on time frame. You got it on the 4-hour. Now you're seeing it on the daily, with the hope that what? You can get into this gap. That's what every long trader right now is hopefully looking at, or some measure of it, because this big gap is opportunity. We know, because we've seen price fall into it many times, we know it can happen when price moves up as well. And if you can do that, and here's our weekly chart, because this is what you're really looking for, the on-ramp onto the daily from the 4-hour, You get confluence with the buy signal on that daily, and you hope, not that you should be hope is a strategy, it's not, but what you would want to see is the same thing occur on the weekly. Price moves up, and with enough momentum, relative strength starts to come back in. You break that zero level, and that's where things get interesting, and hopefully produce a buy signal on your weekly chart. And hey, all of a sudden, you're in a real nice trade. A real nice trade. If you didn't wash it already. But I mean, this is why we're here. Chart told us to sell. You can go into any social media platform at any given time of the day or night, and people will be telling you why you should buy up here. And this is not a Bitcoin thing. It could be XYZ coin. I don't know. Doesn't matter. The chart told you, because it's a language based on math, based on what money is doing, not what people are saying, what its intentions are. And it's not in your best interest to fight those intentions, because when you break one level, you will find the next level, and so on. There's the 100 MA we talked about, and so on and so on and so on. And there's the 200. Current price revisits past. One of those simple rules that you need to remember. Break one level, find the next level. Break that level, find the next level. You know what I'm going to say. And when you're trading on the south side, you're not making longs. When you're trading on the north side, you're not trying to go short. What you're waiting for is the confirmations that you get. That's what's important. Right? Let's not get ahead of our skis and start thinking that we're prediction monsters, because we're not. That is not the job. It just isn't. One candle at a time, each day at a time. Whatever time frame that you're trading, that's all you have to pay attention to. You don't need to pay attention to anything else. Just focus on the chart. Right? Everything we need to know is going to be on our chart. And this is the daily silver chart. Let's go to the 4 hour, because here we go. So, here we go. So big red candle up here. You break the zero level on the Z-score. So basically that interest, the desire to walk across the gym floor just went away. Then you fire the sell signal. Do you feel confident on the 4 hour when you produce a sell signal and you've broken the zero level on the Z-score dashboard that perhaps there might be some momentum to the move? Yes, that would be a fair assessment. Additionally, are we doing something that's familiar? Breaking one, well, first off, points and flats, right? Points and flats, points and flats. They indicate changes in direction, especially on shorter term indicators. So what are we using here? 5 EMA, that's pretty quick. And what do you see? That big point is responding to that change in price quickly. And on TradingView, our indicator goes from white when it's bullish to red when it's not. And what did it do? It broke one level and found the next level. And when it broke that level, it found the next level. It's just a game of levels, one at a time. Does this look familiar? So firstly, open down diverged into the right is bearish. That is your first opportunity, the 20 MA, for some sort of reasonable support. But because that divergence was there, kind of pointing down with the drama, the intensity that it was telling you that it probably wasn't going to hold. And it kept repeating that to you. Candle after candle after candle. And here we go, impulse down, breaking, of course, another level. And then you get the snapback. Now, listen, we don't see enough of these in a lot of charts right now, but you got a nice snapback candle, and what did it do? It wicked the 5 EMA and pulled back. It couldn't close above it. It couldn't test the T-line. And then what does it look like we're looking at now? So remember, we have that impulse down. Failed breakout. Come back and take out these lows. You can see how that's possible. And what would the next target down be? Breaking one level, finding the next. Well, that puts the 500 EMA in play. Or sorry, the 500 SMA in play. Right down here at the lower value range on the volume profile. So this is kind of boxing in the most intense volume through that look back. Is this a completely reasonable place that price might want to go? Yeah. It's been there before, right? It's not the first time through here. You can see it all. So if we come back and we take out the previous wave's lows, there's nothing until we get down here where price has been before for support. And if you weren't going to hold that, then that would be trouble. Now, we're looking at the 4-hour because we want to get an idea of what what's going on the daily. We can see, breaking all that, losing that relative strength. So let's go to the daily. And here we are. Started to roll over. We've broken the 50. We've broken the 20. But because the move had such momentum to it and velocity, even with these two candles, we haven't triggered a sell signal yet, which is really interesting. This, by the way, is the point of control on the volume profile, lower value range, upper value range. This current candle might find a little bit of love at the 20, and it could bounce, right? So when you don't know, and again, we could be looking at a 15-minute chart, an hourly chart, 4-hour, it doesn't matter. When the chart you're looking at, if you can't come to a reasonably decisive place about what you're going to do, then do nothing. Sometimes the best trades you will make are the ones you don't make. Those will be your best trades. And you will know when that happens. And when you kind of come to that realization that, hey, I talked myself out of that trade because it just didn't meet the criteria, and then it went sideways from there, you're like, okay, I'm growing up now. You'll know. You don't have to make a decision at every candle. And the reason I'm saying this is simply because I want to see what happens here. You've got the 20 and the 50 on a daily chart. Although we've, come all the way back to essentially the 0 level on the Z-score dash, we haven't broken it yet. And I would just like to see what happens. We live in a world of chaos right now, so maybe there's a reason for price to spike. So I don't want to make a decision here because I don't feel like I have validation that this move up is over because it could just get support here, right? This is a first touch. If it breaks, well then perhaps we're on to another thing. But for now, I'd want to see what happens. When we go to the weekly, I don't like where price is closing on the week, or is sitting on the weekly. Currently, it's underneath the T line. It hasn't, there hasn't been enough momentum to break the trend, but when you start to see closes below it, and it's not as clear cut and obvious that it just wants to move higher, just pay attention, right? You don't have to panic or anything, but just pay attention, because it could be a sign that it's more kind of distribution like than anything else. So, and follow the relative strength. Are you still maintaining above that zero level? Yes. That's bullishness. Has it been waning? Sure. Right? I don't know on silver. It's interesting because this wick just kissed the 20 MA and then bounced. And it makes you sit there and go, well, was that a first touch and a bounce? Or is that a naked wick that we're going to come back, break the 20, and take out that level? So there's a lot of things that you would have to that I would want to decide here. It's still a bullish chart, right? And those longer term charts are kind of the boss. You know, this is the monthly, not that we're going to hang our hat on it because a lot can go on, but this month's candle so far, albeit early, just came back and tagged the 5 EMA and traded higher. So this little gap, this little air gap here that was created on the monthly just got closed. So I don't interpret this monthly candle as a total disaster at this point. You have to understand something. The Z-score dash is working off of 2 standard deviations, right? So anything above 2 standard deviations, think of it as an anomaly. It's like the freezing cold day in summertime. Doesn't last long, but it's also not normal. So now you're sitting at actually quite a respectable area, just under 2 standard deviations, which is not overly extreme, but very bullish. But when you break down the smaller time frames, yeah, you can see that there's a little more volatility. And that volatility, again, is what? The elastic. This is the elastic in action right up here. When the elastic flexes, remember one thing, that it will usually come back to a place it's been before in one of those chaotic, crazy moments. Does anyone else remember another example of that? What else did that? XRP. You remember? October 10th, right? Crazy volatile day, one of those days where the elastic was being stretched. And look what it did. It pulled all the way down to a place it's been before. 1,000 days of price history, bang. And then the elastic shot back up again. That volatility and elasticity is opportunity, but it's very difficult to monetize because it's so short. And if you're not quick on the draw, you can be upside down very quick too, or find yourself on the wrong side of something. And this crazy volatility, although price snapped back and closed, at like 239 or whatever that was, 237. What do we know about the trend? First off, you had your sell signal 2-3 days before. So we were told, the market told us, I don't feel good, right? I'm going to sell off a little. And after this chattery kind of more distribution, really is what it was, you fall over. But you had warning, right? So many people are so accustomed to living in a world of instant gratification, right? Instant food, instant information, instant everything, instant money. But this doesn't work that way. It's a process. In the real world, it's a process. But it's also not that hard. You had a sell signal on the daily chart. And if you took it and you're playing along using multiple time frames, because it's kind of up here where that all unwound, because you're using multiple time frames, did XRP give you any reason to long in here? No. What are we looking at? All this divergence open down and to the right? So there's the 50 MA, and there's our filter system. When it's diverged down and open to the right, the probability of holding is quite small. Now we're already being told, the chart's just telling us stay short, stay short, stay short. Oh, that's just a green candle in a downtrend. Failed breakout, wicks the 20, and rolls over, takes out the previous wave's low. Does anyone think it's still maybe looking for that place to rest? It quite really hasn't found it yet. You look back on this weekly chart, see the base of these candles, these three candles back in here, all the way back in 23. You pick up these wicks, you pick up this wick. I'm sorry, I think that's where you go. All the way back to where you went before. Price is looking for something to sit on. And until it finds it, it's going to keep doing this. I know that sounds grim, right? But hey, it is what it is. Our job is not to have an opinion or an emotion about what price is doing, because if you're indifferent to it, you don't care. That's the whole point. What's the weekly chart of gold look like? Well, we're just sitting on the 5 EMA. That's it. Yeah, brutal day. Gave away a couple hundred and change. Came back, almost wicked the T-line, probably closed above the 5 EMA. Still a bullish chart. We can only trade what's in front of us and have a system that's structured to work with to help keep us honest and safe. Because if you're not mitigating the risk properly. There's your daily chart. Still have strong relative strength. Not, we're trading above the 20, above the POC, still trading above the 50. Are we choppy up here? Sure, I get it. Right, but you're still a bullish chart, at least for now. And again, with all the chaos in the world, yeah, gold might still be popular for a while. And what else is popular? Oil. And let's get rid of the volume profile because it's not going to like it. This is real interesting for us, right? Because so here's our weekly chart. That was our original 6166 kind of thing. That's 6166. What's this? 1000 day MA. We talk about it all the time. Now, look how price respects it. Now, when you say 1,000 out loud, that's crazy. But then you look at your chart and you go, well, hold on a second here. Look how price respects that level. Find it very interesting that today's candle kind of wicked 1,000 and pulled back. Obviously still a bullish chart, right? So that's what happened on the daily. So I'm very interested to see here, does price break out above 1,000 AMA, which for me is meaningful, albeit driven by geopolitical chaos, right? But doesn't really matter because we're only interested in what money does. Right now, it's buying oil. When we look at it on a weekly chart, there's your 200. Now, not to draw comparisons, not to say, hey, it did this once before, but We always talk about pay attention to doji candles on oil's weekly chart. Now, it's only Tuesday. This might not be a doji by the time we come back or by next week, but at least right now it is, and it's occurring at the 200 MA weekly, which is not quite the first touch, but it's a significant point of resistance. And look at how many standard deviations your Z-score is reading at. 327, which is quite extended. In fact, can we find a time? Oh, yeah, way back here. That it actually got that high. But other than that, it's been a long, long time. So we have a lot to look at, right? If you're not already long, you probably are just going to go, you know what? I think I want to see how this plays out. Because what could happen on this chart? And again, it could be ABC coin, doesn't matter. Up, down, and sideways. Those are our choices. Is this overextended? Sure it is. We already know that, right? If price is going to pull back, what would be an acceptable, reasonable, anticipated level of where that might be? How about the T-line or the 5 EMA? This horse will want to come back to the barn, plus you have the 100 MA in here as well. Right. Now, all of this divergence up and to the right, look how it was treating resistance. Blew right through it. That momentum is telling you it's going to blow right through it. But now we're a little bit hot. Doesn't mean that this bullish run isn't over. You could simply come back, tag the T-line or the 5 EMA, and then boom, make another run. That would make normal sense, right? But this is a bullish chart. Who knows what happens when the chaos calms down, because that elastic, again, is being stretched, right? That volatility is, just think of that elastic being pulled back and forth, like an exercise band. And it's ripping people up as it moves in and out. But the way that price will react, no differently than XRP coming back on the daily chart to tag a level where the elastic got stretched to. Because on the chart, that was a reasonable place where that elastic would be. On this chart, it's down in here, or maybe even is down here. To the upside, you blow through the 200, well, what are you going to do? You're going to start looking for previous waves highs. I'm not convinced that, this is the time to throw it all out there, but you have to trade what's in front of you, because you can't sit there and stare at it all the time either. So let's look at, and I appreciate you guys sending some of your tickers in to me, TROX. What's this? Tronics Holdings. Okay, I don't know anything about this company. I'm going to throw a volume profile on here. But here's what I do know. Somebody liked it, or likes it. Now, here we are at a weekly chart. And this, look, all of this red is basically telling you, as far as relative strength goes, that no one's interested. And it wasn't hard to see how price was acting. All of the sudden, however, you get a buy signal, you break that zero level, and this thing has performed really well. So on this weekly chart, for those of you using the Z-score dashboard, on this weekly chart, we have, just so you know, SPY, XLK, which is technology, XLF, which is finance, IBIT, which is the Bitcoin ETF, and then gold. All right, that's what we're comparing against. So look at the outperformance of this stock against SPY. It's even outperforming gold. And gold was like outperforming everything. This is why this dashboard is so useful. TROX, whatever you are, is a leader, not a laggard. No one is drafting this thing around the track. In fact, it looks like it's doing the drafting. So being in that number one slot, hey, it's an outperformer. It's something that you would want to own compared to the rest of the broad market. And, look at it's outperforming Bitcoin by a tremendous amount. That's quite the spread. And I love how clean, and I can't remember who sent this in, but this is perfect, right? This is the big crush that you get, and all of a sudden someone changes their mind and they want to buy this thing. And from that point on, it's just a chart, right? There's your buy signal right at the 20. That's awesome. T-line, 5 EMA, diverged, open, and to the right, this little back test. As soon as this back test holds here, right, that's a winner for me. Next candle blasts above the 50, and look at the momentum it has. And it still has it, right? And it still has the relative strength behind it too. Here's the daily chart. And it looks like probably the rest of the market in some respects, right? Over on the daily. And what's the downside risk here? You've broken this 20. Do you want to find the 50? So there's your sell signal that came, I guess, today. And you've broken the 0 level. So I don't know what the entry is, but I mean, that's a nice run. Can't complain at all. Like what a nice run this has been. And I'm not suggesting it's over. You haven't tested the 50 yet. So, maybe it's an opportunity if you get support at the 50 that it wants to try and move higher again. And when it does, it's going to be looking to take out, because this will be the previous wave's high, it'll want to take out that and then up here. Right? Up, down, and sideways. Those are our choices. If we back this thing up, you remember that on and okay. So you remember that on and off ramp we talk about on the 4 hour? So this one I think you pay attention to, and this is why. So here you're failing the 50 and you're failing the 20. So we live in a fractal world, right? Everything's fractal. What we see on one time frame we'll see on another, on a various different assets. It's all the fractals are everywhere. These patterns repeat. And is failing the 50, if this is the 4 hours are on and off ramp, failing the 50 and failing the 20, producing a sell signal and a break of the 0 level on the Z-score dashboard, is that positive or negative? That's bad. Right? That's not a good thing. Unless you're short. So I don't like this failing on this thing on the 4 hour. You're going to have to wait till tomorrow to see how this thing unfolds. But you know what the downside risk is. Look to the right and you see that volume gap. You do not want to fall into that volume gap. Because if you do, you could do it with velocity. Right now, if you continue to break down here, is this not a level that you should be paying attention to? Absolutely. Sits in the heart of this gap as well. And then you got all this down here as a draw for price. This would be the first touch of the 100 MA. So you're hoping on the 4 hour that you get some support, but you know how this goes. Break one level, find the next. Break one level, find the next. Interesting. I like that one. That was a nice chart. But I think the 4 hours telling you a story. So here is UUUU. Another ticker that was sent in, Energy Fuels Inc. Now, I don't really know anything about these companies. I'm literally just going off the chart. But what is the 4 hour telling us? This has been choppy, right? And when you see chop, It's basically the market trying to figure out what it wants to do next. And our job is just to try and listen to it, or not try, but actually to listen to it, and wait for it to give us a clear signal as much as humanly possible. Although this is choppy, I think we have to pay attention to what is actually going on up here. What is actually going on up here? And I'm just going to remove the candles for a second. So when we have moving averages that kind of come together and twist, and that's where that kind of sideways trading is happening, we're really waiting for signs of that breakout or breakdown. And what I think you notice, or I notice on this chart, is how the T line and the 5 EMA even bang their heads on the 50. Because listen, they're a representation of price, right? They're not representative of candle in price, but I mean, with a look back, it's a representation of time and price. And these bounces that you just don't go anywhere, one of those things that you pay attention to over time that actually means something. Price just can't break above. Nobody wants to take it higher. And then when we put our candles back on, what do we notice? Well, we've broken one level and we found the next level. We're looking for the next level down now. Broke the 50, found the 20, couldn't hold it, literally wicked the 100. But trend has been established. And see this? See, open, down, diverged to the right under a sell signal at a level where you should hope to get resistance. And that's not what's happening, is it? No, because that momentum is basically telling you there's too much. I can't hold on. And it slips down to the next level. And that's really what's going on. Fail one level, find the next. Let's go to the daily. Okay, so here we are, sitting on the 50 MA. This is the ice blue level. Choppiness, right? Here we are along the point of control. The point of control is doing what? It's aggregating all of the most dense volume at particular price level. That's what the POC is telling us. It's that point of control. This in here, this big in or jut out really is a bench, right? It's a bench that's formed by price at a dense level. And when you see price sitting in these areas, some of them are more pronounced than others. And again, it's all fractal, so it works on every time frame. But when you see price in these levels where that extension is, in this case, it's the strongest part of the whole chart, it's got to chew up all of this stuff kind of like Pac-Man. That's what's going on as it works through all of that past price, trying to hang on to the 50 MA. And if it loses it, it falls into this gap. It's got the lower value range and then the 200 sitting down here, kind of creeping up, waiting for time and price to come together. Don't like the sell signal as you break the Z-score level, the 0 level. Those are things that really get my attention now. Here's the weekly. Wow, Doji Central. Okay. So here we are in the weekly. What are these? 2 equal points in price. Now, is that a double top? No. It's just right now, they're just 2 equal points in price. A double top doesn't occur until you break that center channel area. And by then, you're going to feel it's too late anyways. Right? So the weekly of this thing, like every energy chart, really did take off. Right? And you get a nice clean buy signal. And see how your moving averages in here are twisting together? You're going to feel like you're wasting your time when you look at a lot of these charts. Because it's like, okay, how do I find an entry? How do I find an entry? You know, if I was to take it, every one of these entries, they would just be short trades for a couple weeks. Yeah, maybe. The ones you want to take are the ones, at least in my opinion, that are coming off of major moving averages, either after an impulse up or impulse down. So you have this big trend down, start to show a little bit of love and see the relative strength come back in on the weekly chart. Nice call. Volatile, sure, right? Like this big move up. What happens? You come back down to the 20. Felt like the sky was falling, but that's only because you went up so quickly. And when you did here through this big parabolic move, you formed what? This big gap right in here. So the challenge is to stay out of there, right? A little concerning that it can't make up its mind. You'll see that the happy place is right at this level here, and every time it tries to move higher, it just gets pushed right down. Gets supported as well a little bit, but I mean, it gets pushed down. Still bullish chart, yes. Still have the relative strength in your corner, yes. But you know the drill, right? Up, down, and sideways. But when you do start to break down, you break one level, you find the next level. Current price will look for past. First attempts, like in here, typically are supposed to get support. Higher probability anyways. Now we're going to look at DXY, which is the US dollar. Also doesn't like the volume profile. Let's look at the daily chart. Now, do you guys remember this was our oh crap level? We're at 96.4. And we kind of came down and bounced at it in and around it again. And then what happened? Well, the relative strength started coming back in. And we started making higher lows, higher highs. So as we kind of break one level and find the next through all of the chaos that's going around us, is the chart still telling us the truth? Yeah. Right? Does it matter why all of a sudden the dollar took off? Not really. Not if you're, if you're a trader, it doesn't really matter. You're just following the chart. Here's the weekly chart. Now all of a sudden it might mean something a little bit different. A buy signal as relative strength starts to come back in to the asset. And this is on the weekly chart, and I encourage you to look at weekly charts regularly because they're the least noisy that you're going to find next to the monthly. That's really not a tradable instrument, right? So I spend a lot of time on the weeklies because it's great with trend. Like, even though you have price pressure higher here, did it break the trend? No. Right? But now this is a buy signal on a weekly chart, just like U that we saw, right? A nice buy signal off a weekly chart. What I like about this one, does anybody have a clue? It's coming right at the 50 and the 20 and the 500-day moving average. And. So that's kind of interesting. That's a setup that I like. So I'm going to be paying a lot of attention to see where the dollar goes. But what do we know about the chart itself? Well, we do this in every stream. Look what we're going to do here. Again, not pin the tail on the donkey, but we're just trying to do this quick and dirty. I'll leave it in here. So all I'm doing is I'm kind of picking up the base of these candles here, this wick, the top of this candle. Why did I drop that level there? Well, it's been kind of a support and resistance level in the past. It's kind of established itself as a marker. Just as the Bitcoin chart, remember we drew the horizontal lines where we kind of trapped in that past price, saying that's where we're probably going to come back to? Same kind of concept. But the support in here is actually quite interesting because it doesn't seem to want to go any farther to the south side. Now we're trading on the north side. We don't want to make long trades in here when price is on the south side of the T line. But we can now. So if price moves higher, it's going to look for this level, that 100 spot 2. And if it breaks through there, because that's somewhat, you can see the structure, right, that it provides. Look how it's holding up all of this price, this level. So if you break through there, that's bullish. And you're just going to look for the next level up, the 100 MA. Maybe you'll look for some structural levels like we just did. You're going to look for the 200, and so on and so on and so on. And what do we know? We know that this is the first touch of the 100. Should we expect a little resistance? Sure. Just like we should expect a little in here with the 50, and we're obviously seeing it. And we should also expect it at the 200. But if it breaks through the 200, what does it tell us? The 200 days are our most basic bull-bear indicator. Anything above it, bullishness. Below it, not so much. So you can kind of see potentially how this could turn out. Like, this is actually a bullish looking chart, which I did not expect to say. I was going to say let's look at the Dow, but what I'm going to do is we're going to look at YM, which is the E-mini contract for the Dow, because it's still trading a little bit. Barely. So does anyone know the difference between the Dow and the NASDAQ and the S&P? What's the main difference? One of them is that the Dow is price weighted and the other two are market cap weighted. And I'm not saying that there's any science behind what I'm going to say, but I believe that that's the reason why the Dow sometimes acts a little earlier, maybe, than the other two. And you kind of remember back in, was it last February when we had that bit of a melt? Let's go. Was it? Yeah, back in here. If you go back to this point in February, when we kind of fell off a cliff after this, these are two equal points in price right here, right? But once you break down here, well, then it's an official double top and it has a story to tell. It brought us all the way back. But it was the Dow that went first by a few days or a week before you found it really noticeable. And here we are on the Dow, breaking one level, finding the next level. What did we do here, though? We broke the 50. And we don't want to break the 50. That's the ice. You don't want to break through the ice. That's the ice hole failure. We broke that level, and what did we find? Found the 100 MA. But if we go back to the YM chart, I'm going to bring up the volume profile because it's going to tell a story, like the volume profile always does. Now, this 100 MA that we're getting a little bit of support at is not the first touch, right? So those first touches, higher probability of getting support and moving on, which that did. Second, third, and so on, the probability decreases each and every time. So today's candle, we have no closes below yet, right? But I mean, this candle, all it did was it came back up to just shy of the 5 EMA. Again, it's not pin the tail on the donkey. And then pulled back. So did it recover? Sure. Great. Recovered a little bit. But did it close in a bullish way? No, it didn't. Right? Really what it's doing is it's still trading below the T line and 5 EMA, which is part of our filter system that tells us we're trading below or on the sell side of these levels, this is a no-go for a long, right? That's the basic rule. And we find ourselves in this gap, or testing it anyways. And is it very unusual to come back to the 200 MA on a daily chart? No. Then does this not look like a very logical place where price has been before that we might want to come back to now? Yeah. And it just so happens that it's at this little shelf. And this little shelf is picking up that past price that we talked about. Right? So as price is kind of chewing away at this in here, it could fall into that gap real quick. And there's no relative strength here, right? It's not like you've got everybody wanting to go buy YM. So is what I'm trying to illustrate is that we are on, for a lot of these indexes, a real slippery slope, right? You don't want to get hit by something you didn't see coming. There's the NASDAQ daily chart, producing a sell signal while breaking the 0 level on our Z-score dashboard. Breaking one level, finding the next level. You know, and in a sense, I think this kind of elastic type of price action is lulling a lot of people to sleep. Look at this big move down. Shoots back up, tests the 20, fails. Shoots back up, tests the 50 and the 100 MA. Creates these two skis. We talk about these all the time. Two equal tops. Fails. Now, all kinds of chatter in here, yeah, but in the grand scheme of things, it's kind of clean, isn't it? There's your weekly chart. You start to break the Z-score 0 level, right? So you're waning relative strength. Price is going nowhere, more distributive than anything else. And then you start, right? There's your sell signal, break one level. You're going to look for the next level. Divergence down and to the right. This white line here is just simply, past price and structure. It's got to hold. This is the base of that this shelf, right? If it fails all in this, we got a problem. Because you're going to find what? The 50. It's not personal. Break one level, find the next level. Just like, break the one level, find the next level to the upside. But, we've had years of looking at it to the upside that I think some people have untrained their eyes to see when things are breaking down. Like, I'll give you another example. As price goes sideways here and kind of arcing and rolling a little bit, again, more distributive than anything else, and you see this, I think this is a heads up, right? The waning relative strength is the smart money heading for the exit before the people on the street catch up. They'll already be out that one door while everyone else realizes they got to get out too, and then they jam it. I think that's what's going on. So we always talk about not getting hit by things you didn't see coming, right? Well, you just have to take the time to look. This in here is an example of getting hit by something that you wouldn't have seen coming. This is Bitcoin's weekly. Everybody wanted to long. Oh, this is the bottom, I guarantee it. Right? Buy the dip, buy the dip, buy the dip, buy the dip. Well, by the time price gets down here, you've got no money left. And then this happens. And then you're saying, I don't want to do this anymore. This is a scam. These people are all full of crap. We're all scammers. I get it, right? That's how it feels. And maybe there's even a little bit of truth to what you're saying. But the best thing you could do for yourself is give yourself the ability and the knowledge to understand how to learn, how to read price on a chart. It's not that hard. This lack of relative strength just means Nobody wants to date me for whatever reason. Nobody wants to date me. Produce a sell signal when that nobody wants to date me thing, well, that's what happens. Conversely, when someone does want to date you, look what happens. Price moves higher. And we're just identifying the waves. I'm not suggesting that you buy and sell every time. If you're a longer term investor, you want to hold through all of this stuff, that's up to you. Our job here is to help you interpret and understand and learn how to read price on a chart. This is not a debate place or anything like that. This is a classroom where we can sit down and discuss and learn, so that people who feel like they are or have been victims of the market or other people in it can feel like they actually have some control over what they do. And that's easy to acquire. It's not hard to learn. And there are tools that we use to help you determine how to stay on trend, when to take profits, things like that. Now, if we're trading a weekly chart, maybe we're trading, a lot less margin, right? Because we got time involved and things like that. Maybe we're going to change our take profit levels. I don't know. I'm just making them up as I go here. But just to show you how on a chart you can see visually through our trade, what this is basically a trade management system to help you with all of that. Right, so based on the inputs that I just put in, and just remember, it's 5% leverage. First is 30, the second is 60, and then the last target is 110. There's your stop level, your entry candle, and your stop level. You never got hit. There's your first take profit, your second take profit, and lo and behold, there's your third take profit level. Now, does it mean that you're absolutely forbidden from re-entering again? Of course not. But your take profit levels, you either adjust them or keep them the same. But I mean, you can see how on this chart that actually works. And if you want, once you hit them, we can set them so that they actually get removed from your chart. So you'll see all these are gone now, and that's because you hit them. Simple as that. If they're hanging around, it means you didn't get hit. So what do we want to do? We want to take our profit more frequently in a realistic manner with realistic leverage if you're using it, and having the ability to use those appropriate amounts on the time frame that you're comfortable with. That's what we want. Because a lot of people are visual. You got to see it on your chart. At least that's what you've told me over and over again. So that's what we allow you to do. So you've got a system. Buy, sell, right? You know what's going on here. You can see how price moves. You understand what that lack of relative strength means for the probability of price going higher. You understand what these volume gaps mean when price moves in and out of them. And it's just overlaying these things and not overthinking your chart. Right? You don't have to overthink things. Just listen to the chart. Let the market come to you. Current price revisits past. You know the drill. This here is still completely and totally in play. This move down on MSTR on the weekly. What did this current candle do? Wick the T-line. Again, we're only 2 days in. Wicked the T-line, though, and pulled back below the 5. So these are just green candles in what is still an official downtrend. And I'm not interested in longing this thing until I get, this is just on this particular time frame, but until I get a buy signal and a break of the 0 level on the Z-score dashboard. With the hope of what? What are my targets to the upside? If I get this entry, well, I want to break through the 20. and this point of control. Why? Because I want in here, right? I want to be long with the possibility of chipping away at that gap, right? There's going to come a time when you're going to get to monetize this all over again. If you caught the short, you want to be around to catch the long, and just let the chart tell you. But again, on the weekly chart, pay particular attention. Buy signal, all right, on our signals indicator, and a break of the Z-score on our Z-score dashboard. Boom, price goes higher. Toppy, sell signal, waning relative strength, break of the zero level on the Z-score dashboard. Boom, kerplunk. Did you have any opportunity of realistically getting any support? No, because our system was telling you weren't going to get it. It was very clear. So what do we want to do? We want to enjoy ourselves doing this. We want to do it, we want to learn anyways, in an environment that you can just be casual in and have fun and learn with a bunch of other people that are trying to do exactly the same thing you are. Right? There's no such thing as dumb questions. Our chat room, our Telegram group is a classroom more than anything else. That's what these sessions are meant to be, just sharing knowledge. I was very fortunate enough that when I started doing this, my mentor basically shared everything he knew with me. And I basically, my gift is to try and do that back, right? Share as much as I can. Have I along the way developed some things for myself to help me that end up helping other people? Sure. That's what you're looking at here, and it's all part of our system. But you're all welcome to join our Telegram and join these streams. We welcome all of you, and I will wish you a good night, and I will see all of you again hopefully on Thursday